Good morning, everyone. I'd like to welcome you to Armanino's webinar this morning, Revenue Recognition, New Standards You Need to Know. My name is Michelle Maranaka, and I will be your moderator for this morning's webinar. Before we start, we just wanted to make a couple points about your webinar pane. So in front of you, you will see a yellow arrow, and so you can just go ahead and use that arrow to minimize or maximize the screen. Also, please feel free to go ahead and enter any questions that you have for our presenters this morning. Also, we wanted to make sure that you have excellent sound quality. So for your audio settings, if you are calling in using your telephone, please make sure that you have the telephone mode selected. If you are using your mic and speakers and listening in through your computer, please make sure that you have mic and speakers selected. And with that, I'd like to introduce our two presenters this morning. The first is Scott Schimberg. Scott has a mixture of industry experience, and he was also a consultant for 9 years where he implemented ERP systems. He also rejoined Armanino in February of 2012. Welcome, Scott.
Thank you.
We also have Earl Hunt with us. Earl has a CPA license. He also has a MPN certification as well. He has over 15 years of experience in accounting, and he also has controllership roles for a variety of local and national companies. He has extensive experience with financial and enterprise resource planning systems, as well as depth of experience with business process optimization and system integration. Welcome, Earl.
Thank you.
All right, and with that, I will turn it over to Scott, and he will walk us through the objectives.
Great, thank you. So for the objectives for today, we're going to go over the new revenue recognition schedules, or the concept that's coming out here, supposed to be this quarter. We'll talk about some of the key areas. There's 5 areas of the revenue recognition. We'll talk about those specific areas and some details that have come out, and some recent clarification that has been communicated out from that. And then we'll also talk about how a software solution, in this case how the Intact solution, can support these requirements for you by showing you an integrated demonstration from that. All right, and we'll start with the polling question.
All right, so we're going to launch our polling question for this morning, and in just a second you will see it on your screen. All right, so we'd like to find out from you, how is your organization currently handling revenue recognition? Are you using Excel? Are you using software? Or are you not doing revenue recognition? So please go ahead and take a minute to think about your response. All right, and it looks like we have about 80% of our audience that has responded.
All right.
All right, let's take a look at the results.
Fantastic. So we have, not surprised, it's about half and half on using Excel versus a software solution. Also not surprised having that some aren't doing revenue recognition. In a lot of cases, clients are looking at a kind of a preemptive strike on what they need to know and understand going forward. Maybe they're pre-revenue, they're still in the development phase and getting ready to have revenue, so that's not surprising as well. But just that combination of Excel and software combination is almost split, maybe a little bit more on the software side of it. But just an interesting statistic I think is nice to share amongst our group. Okay, so if we go on to a little bit around our background activity of what's been going on, and kind of set the frame of what we're going to talk about. And so, if we go back in time, this, as you see on the next slide, how long we've been at this. When we go back in time, we'll have the FASB and IASB got together to have a single standard for revenue recognition that will really bring together US GAAP and IFRS, that we have a standard that we can deploy across both areas. So that's the background and the goal of what's trying to be done. And they've been at it for quite some time. As you can see on the slide, it started really in September of 2002, and have been working on that over the last several years. Probably the most time where we saw a lot of comments and information was off of that initial exposure draft, where there's over 1,000 or just about 1,000 comment letters that came in, one of the highest ones that they've had ever. And then getting the revised exposure draft and working through the redeliberations through 2013. It's been extended out from their original plan, and we're expecting, I was online last night to see if they had released it before our meeting today, and they hadn't as of yesterday seen that they had gone final. They're waiting on some codification pieces, is my understanding, to get that out, but it's imminent to come out, and most recently saying late May, so it could be this month, with an effective date for public companies being, any reporting period after December 15, 2016, and a year later for non-public companies. And there's a couple things that really come to light. For public companies, there's no early adoption, but for private companies, there is. They would allow them to do a adoption as early as the public companies, so reporting periods after December 15th, 2016 would come into play. And there's two things that have come in that have been a clarification. When it originally came out, it was talked about doing a retrospective comparison, meaning that you do 2 years side by side as a comparison. They've now had that become an or cumulative effect in the retained earnings adjustment as of the date of adoption of the adjustment. So it's a little bit of a change. It has potential of making it a little bit easier for companies, particularly if we get into comparative financial reporting that comes into play. And then really what the revenue recognition does is it breaks down revenue recognition into 5 steps. And one area that was not clear when this originally came out was a concept of collectability. And in October of 2013, the boards met and they discussed and came out with a concept around collectability, that you would determine that before you get into the 5 steps of revenue recognition, and have that concept of as long as it's probable is the wording that they used. And so we're looking for probable collectability for that. And if you feel that that's probable, you'll be able to get into these 5 steps for revenue recognition that comes into play. So we'll go through each one at a high level and call out some of the details that we think are important. So really, when we look at identifying the contract with a customer, it's similar to today of what we're doing. So we don't think that there's a lot of change that will come out, but it is similar. And the big things that will come into play are really, it can be the written, oral, implied. So like the intent comes into play, and you can use judgment around that piece of it. But combining contracts, that's a similar concept to what we do today. With contracts that come in, near time, within a few weeks or months of them, they may need to be combined. But there's also some changes with the modification. So it'll become effective when it's approved on any modifications or changes to agreements. The change in price would be treated as a change in estimate, and then additional or new services or products would really be evaluated as a new contract, as long as it didn't have that impact of a near contract or near timing or similar contracts that would come into play.
Yeah, Scott, and just kind of what people can be looking at today with regards to contracts is just kind of reviewing those, making sure that those contracts that are in place today are identified, and just kind of look at the new rulings. Just sort of some nuance under the existing guidelines. It's really the persuasive evidence that's used with respect to the contracts, which means evidence of the final understanding between the parties about the specific nature and terms of an agreed upon transaction. And under these new rules, a contract is really simply defined as an agreement that creates legally enforced rights and obligations. So a little bit different, a little bit broader look at what a contract is.
I think that's right. And then when we get into the identifying the separate performance obligations, that again is similar to what we see today within the rules. And we're looking for the distinct goods and services, so some of the easy things to do if you're selling it separately or you're selling it combined, and you can easily break it apart between the two. You can easily identify that. But in some cases it might not be that easy, so it might be a combined good. Think of like kind of customized software or some type of services that are required to be coupled with that software to be deployed. That would be a good example. And the caution is small services or small pieces of it. It didn't give any guidelines around ignoring those pieces or considering them to be immaterial. It came out with a concept of you have to consider of all these pieces and break it out amongst all the different services and components of your bundled product. So really looking at whether it needs to be combined or separated out, it will have an impact on your revenue, and it could have an impact on the timing.
Right, and then one other consideration, Scott, is that companies under the new rules may see changes in the timing of the performance objectives that have to be achieved to recognize revenue. And this could also drive changes to contract design going forward, so that's another aspect to look at. It really turns out that this is a great opportunity to review your contracts and line them up with the new regulations.
Yeah, I think this is a good time to talk about a strategy of getting ready to go forward with the new revenue recognition. We know what the rules are today and how those apply to the organizations, but it's now getting the strategy is to get that understanding of what the rules will be as you go forward, and what the different elements and how your contracts will apply differently under the new rules. And when we start looking at contracts, whether they need to be combined or separate, and then do you have agreements, and the timing of those agreements, it's going to be critical to identify how do you get that information so that you can do revenue recognition today, but then also how do you keep that information and get it ready so you can do revenue recognition easily as you go forward tomorrow under the new guidelines, and looking for what's the impact to your financials so you can have an effective communication with your management team, with your compensation committee, because if revenue starts changing and the timing of that's going to have an impact on compensation. Your internal controls and how you're doing your judgment will have an impact on this as well. Your estimates and the validity of those estimates. It will cross your entire organization. So having that strategy to pull all these pieces together and be able to track the components and be able to identify how that will have an impact on your organization, I think is going to be very critical. And then the third step is determining the transaction price, and this is where we see a very significant change. The general rules are fairly similar. It's when the customer takes possession of the goods delivered or the services delivered, and title transfers. That's similar, but there's the new piece of it of the variable consideration, and this is where we've seen. After doing this presentation a couple of times, we've seen the most comments come back on variable consideration, and so around companies that have technology licenses that come into play, or some level of IP that they've licensed, or have a royalty that's coming in, and trying to identify and do an estimate on what that value is, so that they can do revenue recognition for that. And it is really identifying what is that revenue recognition component. And the other piece that's important is it's not just IP licenses and royalty. This could come into play with usage as well. So we have clients that have a component of license fee plus a usage fee that may be based off of, in the technology sector, gigabytes of data storage or number of clicks on the usage of a certain aspect, and estimating out what those levels of usage are to come in. And the guidelines are coming back and saying, okay, you need to estimate that, so you need to use judgment and make an estimate of what you think that's going to be in terms of revenue. And then you need to be able to come back and be reasonably assured that you're going to be receiving that level of revenue, and you're not going to have significant write-offs. That's going to be the fallback, is that you want to estimate it so that it's reasonable, but that you're not going to have a significant adjustment, and that you'll have to come back on this and update each reporting period. So that's going to be the significant piece of it. So whether your estimates are going up or down, that's going to be the component of based off your actual results that are coming through, and then again using judgment of what you're going to see or expect for the life of the remaining life of that contract.
Yeah, and I would agree this is the area that has the most significant change. But what I see is companies will have a lot more latitude to estimate revenue and book the revenue when the goods or services are delivered. Because under the current traditional GAAP, a company would normally wait to record the revenue until uncertainties like collectability, which we mentioned, or contingent payments are recorded. So overall here, the ability to estimate will result in companies probably, in this case, booking revenue sooner than they have in the past.
Yeah. Go ahead. And then once we get the price identified, it then gets into the allocation piece of it. And this is a similar concept to what we do today. You have the different deliverables and elements of the agreement. We now have the price. Now we're going to allocate that out into the different areas. And a couple things around this that you can use is either the adjusted market assessment approach, the expected cost plus margin approach, or even the residual approach is what's been discussed so far in terms of getting the details out, or the break out the revenue amongst the different items. And then also, again, it'll be that variable consideration, really, and linking that to the individual performance obligation, and having that one specific. And then once you set your allocation, there's not a reallocation after that initial inception of the agreement, but you may need to update your assessment on that variable piece of it, whether you're going to receive more or less. You might have some adjustment that comes in at that time as you go forward. And then changing that your transaction price, again, it's that variable consideration, and then any contract modifications that we already talked about early on that comes into play. But I think the big piece is when you have a performance obligation and it's based on the original allocation, you could have a situation where you have to take a write up or write down on a specific line item based off of what you're actually seeing come into play. So you could have a situation where you're taking a loss and you have to record the loss for that certain obligation that comes into play, and you take that loss at the minimum amount to satisfy that obligation. And so you'd have to determine what your cost is to deliver that, net it against any proceeds that come in, and record that as a loss, if you will, at that point in time.
Yeah, and I would just add here that to manage these new estimates and the performance allocation, companies may want to stratify their transactions and really segregate them based on similar characteristics or key elements. And that would really kind of help as the transactional volume goes up, is to really kind of group the transactions into these key elements to make it easier to manage those going forward.
Yeah, and on the last step of it, of identifying when a performance obligation is satisfied, is really where we could see some potential changes or shift in revenue, particularly around the service portion of an obligation or an implementation of a software or a change of a software. And kind of the gotcha that could come out is another entity would not need to reperform the work if hired to finish. And so, for example, doing a software project where there's some development or an integration, it might be hard to justify that another firm or another company would not have to redo your work if they were to take over the project and be able to work on it on their own. That a partial integration or a partial piece of it would work without it being deployed. So that could be a potential gotcha to at least look for in terms of when does that actually come into play. But the tenets that it's working through is the customer can use the product. They can take the benefits of using that a piece of it in its total. So kind of think through the concept of how that has an impact on your organization, specifically to software and any delivery that needs to be associated with that as well, and come into play. And then other considerations, just to kind of tie it in, we won't spend a lot of time here, is really around the direct costs associated with the sales and capitalizing those costs and expensing them out over the life of the contract. Or, kind of if you go back to days when I started with accounting, the matching concept and getting a better matching that comes into play from that. And then again, the losses on contracts. And really, if you have a loss that would come in, you'd have to calculate what your minimum cost to finalize or deliver that obligation and record that loss from that minimum delivery component. And then we'll go ahead and get into a demo of the Intact system and show you how that can solve some of the revenue recognition pieces. And Earl will lead us through that piece of it.
Right. Are we able to see a couple of the slides I wanted to show first before we dive into the demonstration here?
Yes.
Okay. So let's take a look at the slide here that talks about the agenda for the demonstration. And so the agenda I'm going to go through is really three major areas of managing revenue in relationship to the Intact system. And the first one is really connected systems. And so connected systems, we're going to show the integration between the CRM package, which is Salesforce.com, and Intact. And then we're going to take a look at the concept of automated processes, so the ability to take a sales order or an opportunity in the Salesforce system and have that flow through in a workflow and create the automated, create the sales invoice and also create the associated revenue recognition schedules and renewals at the end of the contract period for that particular invoice. And then we're going to take a little bit of a look at how we can analyze the business through powerful dashboards and metrics and reporting. So if we go to the next slide here, we're looking really at that streamline quote-to-cash process, which really starts with the salespeople, working in the application that they work in every day, which is a CRM system like Salesforce. And so, I first want to focus on this connected system aspect, and in any subscription-based business, it's really essential to streamline and tighten that quote-to-cash process. And this helps with keeping your recurring profit margins high, which, of course, is one of the key components in growing your business. And so I want to start out in one of the commonly used customer relationship management systems, or CRM systems, which is Salesforce, which likely your sales and service teams would pretty much be living in during the business day. And then I'm going to show the tight two-way integration between Salesforce and the Intact financial system. And the idea here is to have the sales team leverage that Salesforce tool to create new accounts, quotes, and opportunities. And when they convert those opportunities into orders, to be able to create the new order automatically and the associated booking into Intact. So I'm going to transition over then to show my screen. So I can make myself the presenter here. All right, Scott, able to see my Salesforce.com screen?
Yes, we are.
Good. All right. So I'm in Salesforce here, and I'm looking at all the tabs at the top of the screen, and I'm really currently in the Accounts tab. And I created this account recently in Salesforce. I'm going to go down to an account here called A Software Company, and I created this account in Salesforce as a new account that I was working with, actually a new prospect. And when this prospect turned into an account, I was able to simply click on the Sync to Intact button here. And what that did was it transferred that information over to Intact and created a customer in Intact, and then it came back with the Intact customer ID. So this is really my synchronization point right here, and it's also synchronizing in real time what the balance is due from the Intact system. So I've got visibility over here on the Salesforce screen for the salespeople to understand that information. I can also see a number of buttons here at the top of the account which give me a look into the customer and transactional details that are maintained in the Intact financial system. And one of those is the customer ledger. So if I were to click on the customer ledger button here in Salesforce, it's taking me directly into a screen within the Intact system, and so I'm getting a view of that customer's ledger for the month of May. I then, wherever I have a blue underline, that information is hyperlinked, and I can drill down to additional details. So if I drill down here, I'm actually looking at the AR ledger for this particular invoice, and then I can drill down to the actual invoice itself. And I'm still just originated all of this information came directly from Salesforce, is where I initiated this inquiry. And now I'm actually looking at the invoice transaction that was created through the workflow process, and we'll go through a similar workflow process, and I can look at all the details associated with that invoice. I can look at things like the history of the invoice. I can see it started out as a sales order. It then transitioned to an activation, and then from an activation turned into an invoice. I can also see here the payment details and see when that invoice was paid, and it was paid by check and the actual check amount. So this is a tremendous amount of information that the salesperson working in Salesforce has at their fingertips. So let's take a look at a particular opportunity that's associated with this account. And I'm going to drill down here on this opportunity called software subscription. And I've got a variety of information that's attached to the opportunity in Salesforce, including products. And so the products can be synchronized between Salesforce and Intact, and you can designate which of the product books is your master. It can be either Intact or it can be Salesforce, and then it's going to synchronize any changes accordingly. As I scroll down here on this opportunity, I also see sales orders and invoices and other documents, and all of these are synchronized between Salesforce and the Intact financial system. Note that on the products, each of the line items has a date, which is going to be our start date, and also the opportunity to put in a service end date, and those dates will be used to trigger those revenue recognition schedules that are based on service start and end dates. Now, because I have products here assigned to this opportunity, I'm able to come up here and really start that whole process from the Salesforce system to create a sales order. So I'm going to go ahead here and click on Create Sales Order. And that, again, that's going to bring up an Intact screen, and it's transferred all of the information from the Salesforce system, from the information I put in, and it's populated that information over to the sales order screen in Intact. It's brought in payment terms and ship date and so on and so forth, and you see it's also brought in all of the items, the start date and the end date. I'm going to go ahead here and make a change to the price on this last item because I want to demonstrate the system's capability to take that discount and be able to allocate that in my allocation arrangement, like as we discussed earlier. So from here, I'm going to be able to post this particular invoice or this sales order in the Intact system, and it's looking for a currency amount. I'll put that in very quickly and go ahead and post that. And we see that it's created sales order 1107. So when we come back over here to our Salesforce system, we can quickly do a refresh, and we can go down here and take a look that it's now synchronized and added sales order 1107 to our Salesforce screen. We're going to switch over then to the Intact system, and we're going to take a look then at the next aspect of the process, which is really the automation of these sales orders as it goes through this workflow process to become either a shipment document, or in the case we're going to look at today, we're going to go straight from a sales order to a sales invoice document. So we're going to go down here and take a look at the list of sales orders, and as you remember, we just created this sales order 1107. And so as I look at converting this as part of this workflow process, I've got three choices here, and so I can convert this into an activation if that's a step that I want to do as an intermediary step in my process. I can create a shipper document. I may have a line item on my sales order that is an actual deliverable, maybe a piece of hardware or something that I need to actually pick, pack, and ship, and so I can do that from here. And in this case, we're going to go directly into a sales invoice from here and click on the sales invoice. So this brings up the sales invoice screen in Intact, and there are a couple items I wanted to point out here. And so now we see on the line items we've got some additional information that's been populated automatically, and this has come by virtue of the information that's attached to the individual items in the system. And so the additional pieces of information that have come over to this, for us, are both the revenue recognition template for each item, and in the case of the subscription and the support items, we have a renewal macro, and so this is giving the system the ability at the end or towards the end of the contract period to perform some functions, to either email or create an opportunity in Salesforce, or actually create a transaction document at the end of the service period to give us a heads up that this needs to be renewed, or actually start with a transaction through that process. We also see here it's brought in information about the VSOE price list, and that can be configured. Again, under the new rules, you would contain your estimates of pricing for the different components that you're putting in. And so because I want to show you this ability to do the allocation here automatically, I'm going to assign each of these lines into a bundle. And I'm going to assign each of those into bundle 1. And then from there, I'm going to go ahead and post this invoice. And so now the invoice, now the sales order has been posted into an invoice, and now we're looking at the list of sales invoices, and we can see here that the system has created invoice 2165. If I go back over here to my Salesforce system and refresh that again, and we're looking still at the same opportunity, and I go down to the invoices, I see now that it's synchronized over and added invoice 2165, so the salesperson that's working with this opportunity has that full visibility and knows that the invoice has been created in the Intact system, and they've got full visibility into that. Let me go back over into my Intact system, and when I'm looking at this line for the sales invoice, I really have a wealth of information that I can take a look at. And so part of that information is the ability to look at the revenue recognition schedules that are associated with each line item, as we saw when we first posted it. And so I'm going to drill down here on delivery status, and so this shows me not only the delivery status of each of the lines on the sales order in the invoice that we created, and we can see that 3 of the lines defaulted to today for the delivery date, and that was something, again, that I pre-populated into the item. It can certainly be changed during this workflow process. And on the 4th item, which is the plum services, we have a delivery date that is undelivered. The status is undelivered, and we would need to come in at the point that we've delivered those services and change the delivery date and update that. And then that's going to trigger the start of that revenue recognition schedule. So let's take a look at the revenue recognition schedule that was created automatically for the on-demand subscription. And we can just do that here from the screen and click down on the schedule. And I'll make that schedule a little bit bigger. And so this revenue recognition schedule was built on this template called subscription. And so it was able to pick up the start date and the contract end date, and it knew that because of the template that we used, it was going to spread this revenue monthly throughout the term of the contract using the start and end date. And so we've picked a recognition method here, which is straight line percent allocation, which is really taking the full months and just doing a full revenue recognition of the same amount for each month, and then it's taking a percent allocation on the partial months. We can drill down here and take a look at specific information on this revenue recognition template. We see it's configured to do this straight line percent allocation monthly. It's posting at the end of the period. That's a choice that you have as well. And the recognition term is the contract term. This gives you a little bit of flavor into some of the other options that you can set up through a revenue recognition template, all the way down to the exact days per period on a proration. We also have the ability, particularly in service delivery, where we can base that on a percent complete for the project or down to a milestone level as well. So a lot of flexibility when it comes to building and using these revenue recognition templates to build the revenue recognition schedules. I also wanted to point out on here that at the top of the screen we have various buttons that we can use to manipulate this revenue recognition schedule. Oftentimes things don't go as smoothly as just having the contract go through its normal course and just recognize revenue normally. Sometimes you need to put the revenue recognition on hold or even terminate the schedule, which can be done here by bringing up the termination screen. There are a variety of different choices here on what to do with the unrecognized revenue, as well as the opportunity to assign a reason code or category to why was the revenue recognition schedule canceled, and the opportunity to put in a memo field here as well. We can also put it on hold, or the edit gives us various ways that we can change the timing. We certainly can't change the total amount, but we could change the timing, or we could reallocate and start the remainder of the revenue recognition schedule on a different date range. if we look at the revenue recognition schedule, which is currently on hold because it's undelivered for the services, we see that that revenue recognition schedule is actually different from the services schedule, because we normally would deliver our services over a 4-month period. And so we've configured a template that complies with that, and we're starting our revenue recognition on the services at the end of May through the end of August. As we know, that delivery commitment has not been fulfilled yet, and so that schedule would not start until we came back and updated that information. We're going to circle back here and take a look at the allocation that the system did automatically when we first set up this invoice. And we see here we did change the amount on the sales order, and we changed the amount here of the unit price of the services that we delivered, and that resulted in a $3,000 discount for the total order. And so the system was able to automatically allocate the $3,000 using the fair value method across and allocate that to the different line items to total our actual invoice total. These are the allocation amounts that are then used on the various revenue recognition schedules. So it performs this allocation first and then assigns that appropriate amount to the revenue recognition schedule. To kind of come full circle, we also, when we configured the sales order and when the lines came in on the sales invoice, there were 2 items there, the on-demand subscription and the on-demand support, that had those what they call renewal macros assigned to it. And so we're going to take a look at the impact of that. We're going to take a look at the report for the renewals forecast, and we're going to look at this for the next 13 months, and let's just focus on the particular customer that we've been working with, which is the A software company, and then we'll go ahead and view that. And so this report is showing this then at a glance for each month for a customer or for the total company when we would expect to have bookings for renewals on contracts that are expiring. And so we had just created this invoice 2165, and so it's showing in both of the item IDs, both for the on-demand subscriptions and the on-demand support under that invoice number. When we scroll over to the month of May, which is when those contracts are expiring, we see then those figures. And what we had done is we had said to the system we want to create a transaction, which it will do in the month of May, and from there it's also taken the original price of the contract and it's done an uplift of 5%. So these figures, the $18,900 and the $47,25, are 5% higher than the original price, and so that's fully within your control on how you want to do that. And really, just to show you the flexibility in the renewals, we'll take a look at those renewal macros and just kind of at an overview glance here. And we can see that I've created a few of these renewal macros. The one that we were using here is this 10% uplift, and we can have the macros perform a variety of different tasks. We can have them, create a sales transaction. This one is set to create a new sales transaction within 10 days of the contract end date, and is creating this transaction type of renewal invoice. We can have it automatically email a notification to the customer that the renewal is coming up. We can send an email alert to anybody within the organization, probably would be a salesperson, or we can create an opportunity within Salesforce, not create the actual transaction, and then have the salesperson work that opportunity and go through this process flow like we've seen today. So I wanted to switch gears a little bit and go over to the last aspect of revenue management, which is the metrics and reporting. And one of the one of the greatest strengths of the Intact system is the ability to display and manipulate and show a variety of metrics, graphic elements, and tabular elements all on one custom dashboard. And so I created this dashboard that was really specific to a lot of the metrics that that people use in the subscription or SaaS-based businesses where there's renewals and churn and those kinds of things. So what we see at the top here is a number of performance cards displaying these key metrics. We've got one here that shows churn this month as compared to the prior month, and we've got the ability to compare and have a kind of an arrow up and down. We've got net new annual contract value and bookings and new subscribers, and you can configure these metrics and these performance cards to look at any period compared to any other period and really give you kind of a trend view. You can see that you can use the arrows, you can use the thumbs up, thumbs down, and of course the ever popular smiley face as well. As we look down the page, we also see a variety of graphic elements that display real time from the information in Intact, and we see other subscription-based kinds of information like a churn graph here. We can scroll down here and see a customer acquisition cost ratio, all information that is coming from the system. In terms of churn here, certainly this gives us information on a general trend, and if we wanted to look at a tabular report that gives us additional detail into that churn broken down into the different plan types that we have, we can certainly look at that as well. The bookings report here is another report that we can take a look at on a tabular basis, and so we've got a bookings report here, and the bookings are really coming from the information as you post a sales order. So it truly separates that bookings concept from the actual revenue recognition as you post your transaction through to a sales order and activate one or more revenue recognition schedules. And we're able to take these reports full screen right here from the dashboard, and when we take them full screen, many times the reports will be hyperlinked and we'll have the ability to drill down to additional detail. So we'll take a look at subscriptions here, and we're going to drill down to the additional detail, and that brings us over to a general ledger report. We can see over here that we have a batch that was created for today, and when we click down on the $18,000 here, what we get then is the actual journal entry posting for the bookings for the invoice or the sales order that we posted today, and then from here we can actually drill down into the sales order itself and down into the detail. So we can start at a high level and then drill all the way down into the respective detail from that high level. As we see that this bookings report that we just looked at shows us, across a month and a quarter, the bookings that are really categorized by the different aspects of our GL structure. We've got services, subscription, and so forth. It's a very easy change in the Intact system in the reporting because of the dimensional structure of the chart of accounts. We're actually tagging the customer to each of these transactions as well to create that same report just with a couple of mouse clicks, and instead show the bookings by customer instead of by GL account. So I also wanted to highlight in the middle here, we've got this revenue forecast, and this is really coming off of that accumulation of all of those revenue schedules that we're creating and terminating through the course of our month and year. And we can also show that as a tabular report, and so now we've got that same revenue recognition showing into the future for 4 quarters what we expect to be showing as revenue based on today's situation. And then I wanted to show you just really one final report before we kind of wrap up here and maybe have a few minutes more for questions. And that really kind of goes into a report that's going to show us these revenue recognition schedules and in a way to kind of slice and dice those. So I'm going to go over here to revenue recognition schedules. I'm going to change my date here so we're looking at the total year. And I'm going to go down here again and look at just this one customer that we've been working with, which is a software company, and go ahead and say View. And so now at the bottom of the screen we're seeing all of the revenue recognition schedules that are associated with that customer. And we see all kinds of schedules that have been created. Based on the transactions that we've been doing, we can slice and dice that information up here and filter it, so we can take a look at the ones that perhaps are on hold. If we wanted to see, well, what schedules are on hold for a particular customer, and we can see that here's that sales invoice 2165, and this one's on hold, as we know, because we haven't performed those services yet. And so just a way to really manage that, we can drill down from here to the sales order document, or we can drill down here and take a look at the revenue recognition schedule itself, do our hold, terminate, edit, those kinds of things right from the screen, or post these revenue recognitions through to the general ledger if we've designated that those need to be manually posted. So just to kind of wrap up here in the time that we have left, we started and we saw the three really important aspects of managing revenue, and the ability for the salespeople to work in the system of their choice, the system that works for them, the system that's more geared towards sales and service people, which is a CRM system like Salesforce, and the ability to have that system connected where salespeople can create new customers, have those customers synced to Intact. We saw the ability to really start a workflow and those salespeople to add products to an opportunity in Salesforce, and when that opportunity is closed, to leverage that tight integration with Salesforce and Intact to create the sales order. And then we saw that beginning of the automated process, which is that second aspect that I showed today, where we're able to really effectively manage and create automatically those revenue recognition and renewals. Those revenue recognition schedules were automatically created for each line item. The renewal macros can be designed to do a variety of things, all the way through actually creating a new transaction towards the end of a contract period. And then we saw the ability to bundle items together and into a multi-entity arrangement so that we can do the allocations that we need to do under the fair value method. And then lastly, we saw the system's ability to provide really outstanding metrics, charts, and reports, many of which are specific to your subscription-focused business, many of which can start at a top level and allow you to drill down the details to investigate issues. And so, we just really hope that you enjoyed the presentation today and got a good flavor of what's coming down the road for the new revenue recognition rules, and how the Intact system is already geared to help you to accommodate those new rules and really manage revenue through connected systems, through that automated process, and to show you that really great information to analyze your business and make great decisions going forward. So I'll turn it back over and open it up. I think we've got 5 minutes here for some questions.
All right, yes, so we do have a couple questions that have come in from the audience. So our first question says, do all SFDC users need Intact user licenses to view the drill down info in Intact through SFDC?
Yeah, so the way that the integration with Salesforce was written is a user within Salesforce, as long as they're in that system, and the screens that Earl showed, that person being able to link in, they would not need to have a user in the Intact system, and that their user in Salesforce would be sufficient. So the screens that opened up, even though it's an Intact screen, does deploy through it does show the screens with an Intact, and it does not require that Intact user license.
All right, thank you. We have another question. Is there an integration between Microsoft CRM and Intact?
Yes, there actually is, and there is an integration with that. Armanino actually has a integration for the Microsoft CRM and Intact as well.
All right, and so please do take this time if you have any questions for Scott and Earl, go ahead and submit them. We are currently receiving a few more. All right. So I think that we are right about at 11 o'clock. So if you do have any more questions, feel free to go ahead and reach out to our presenters, Scott or Earl. On the screen right now, you will see both their phone number and their email, so feel free to go ahead and reach out to them. And I just want to thank both of our presenters for their time, and thank you very much for your time as well for listening in. We do thank you for your participation, and we do hope to see you on future webinars. Thank you so much, and enjoy the rest of your day.
Thank you.
Thank you.